Okay guys, welcome back to another video. So today I'm going to be sharing with you a trade that I took on GBPUSD yesterday. Now it was a short, so I got one extreme entry and then one scaling entry. So I'm going to basically break down everything in the thought process of why I actually ended up getting into this trade and what my thoughts were regarding it as well, because there is a few little details that are very easily mistaken when it comes to liquidity trading, right? So that's kind of the overall scenario of what happened. So what I'll do for you, I'm just going to quickly show you the 15-minute time frame. So actually, let me just break it down to the hourly, right? So we can see the daily, that, let me remove everything. So since we made this low here, right, this was the most recent low there, right? Let's remove it just so it's clearer. Since this low was made, price has basically been trending back up and pushing up, right? So since the 10th, 11th of Feb, price has basically pushed up on GU for almost a week, and it hasn't had any real significant pullbacks, right? So this is the daily time frame, but I had it already marked up. You can see this is a previous weekly high, and then this was a previous weekly high as well. So as price pushed up, it rejected, made a new high, higher low, and then made a new high again, right? So it's overextended. You can see here that prices took one weekly high, took another weekly high, and then when we break it down to the 4 hour, you can see that after it took this second weekly high, it overextended. So normally when a previous daily or previous weekly structure is taken, there could potentially be a reversal if there's enough liquidity that is left below, right? So in this scenario, look, this is where the second weekly high was. Price literally pushed up, used it as what most people call support, and then continued going. So there was no reversal. It was basically a fake out, and then we continued going higher to trap sellers and then stop them out. And then as soon as we got into this price here, you can see that GU is literally trending to the upside, but it's exhausted, right? It's no longer flying, it's no longer impulsive, it's slowing down. So it's basically deciding what it's potentially going to do next. Okay, so when we break that down to the trading view has been a bit slow. Trading, oh, yeah, okay. So on the hourly, you can see it's a bit clearer, right? It's making higher highs and higher lows. Here, look, made a high here, and this is where things got really interesting. So I break it down to the 5 minute and just basically show you how I kind of got the idea for this trade. So I've obviously annotated it already just so it's clearer. So I use daily open as a potential sign of rejection, potential targets, and obviously Asia session as well, right? Now, what's happened is in Asia session, price has literally pushed up and took a previous daily high with speed, right? This was the previous day's high. And we've had a rejection, and then we're left liquidity to the upside, okay? And then when we look the day prior, price had made a low, and then after making this low, price made a new high, right? That was the most recent higher high. This was the new higher low, and then we made a new higher high. So all the liquidity from this, anything to the left here, of all the sellers that were in around this area has basically been liquidated. So there's no more sellers. And again, remembering how we started this conversation, how we started this video, that we've already overextended, so 2 weekly highs in a very short period of time, and now we're kind of exhausted, potentially looking for rollover. Because when price shoots up so high, so fast, with no, significant pullbacks, then it will eventually get exhausted, and then it will, the probability-wise, there's a higher probability of it reversing, or at least having a significant pullback, than continue higher because it's already gone up so much, right? So we've taken the daily high, and this price here was where the last smart money trap was left, right? So this was the low, price broke structure, you can see breakout was labeled, price pulled back. So supply and demand traders, smart money traders were all getting in. So they bought, price went into Asia, price pushed even higher. So we can even say that it broke another structure. So these guys who obviously entered there, obviously they put the stop losses here, or they put the stop losses there. And as soon as the second breakout happened and we took a previous daily high, then most people obviously go in around break even or just below the most recent low, right? So then we came to Asia, and Asia started forming this kind of bullish price action. Now, we're already in this price action overall here, right? All of this, higher highs, higher lows. Now it's kind of doing the same thing again. Bear in mind there's no sellers left. So I'm thinking, okay, what is this price telling me here? Because let me just make it clearer. So you can see bulls are getting trapped. This is 7 a.m. So GBP news CPI came out. Price pushed down, pushed up, and it closed, right? So one thing, just so you are aware, with news, especially NFP and FOMC, CPI, when there's a big wick left, either to the upside or maybe even to the downside as well, that's price that's been delivered unfairly, so it's not real price. So you remove the wick and continue as the price prints, right? So in this scenario, price pushed up, right? This was the liquidity that was left here. You can see the trend line, right? So people were entering breakout to the upside, and trendline traders putting a stop loss below the most significant low, right? So price pushed up. Now, in a lot of scenarios, this would actually be a fake breaker structure. What is FBOS? Fake breaker structure, because price pushed up in line with liquidity. So all these buyers were basically getting paid. So if that was a fake breaker structure, then this would have been an inducement low, right? So we would do a fake breaker structure to the upside, trap more buyers, so more breakout traders, make these buyers think that we're going long and we continue higher. And what's happened is price pushed up and then it broke lower, right? So then I looked and thought, this is a bit strange. Why would it, if we are supposed to go higher, why would it push up first to then come down to then go higher again? If we're already so high, what about if this is not a fake breaker structure and this is the inducement higher, and then we had the breaker structure here, you can see RBOS, real breaker structure, this is where it made the low, and then the mitigation happened, London Open pushed up into the POI. As soon as I saw this pushing into the POI fast, I thought, okay, let me see the reaction of this POI to see if this is literally going to roll over now. So my entries, I always tend to go into 1 minute and 30 seconds. Where are we? Right, here we go. Right. So as soon as we had that inducement to the upside, then we had that real breaker structure, price pushed up, mitigated the last imbalance, and then started to pull away. Right. So as soon as I seen this candle and it wicked, I thought, let me see if we actually get another continuation. And then we had the next two candles print, where the push up, and then we broke lower, confirming a bearish engulfing. I thought, perfect entry, stop loss just above. Now the reason why they put my stop loss above there, right, is obviously this all comes down to experience, but there's nothing here. Like when you look at imbalance wise, there's nothing there, right? So I literally just put it just a little bit tighter, because if price went back up here, for me, that could potentially invalidate my trade, and it's got nothing to mitigate to then magically roll over. Sometimes that can happen, but from my experience, I like to see an imbalance, a little mitigation of the mitigation, and a continuation lower. So I got in on this bearish engulfing, stop loss just above, and then price literally just started melting away, confirming a continuation. And then what happened was, as soon as we made that low, price came back up again with speed as we came out of London Open, 9 a.m. Price pushed up again. Look, you can see clearly that here's the last imbalance. Well, there, but obviously it hovers over. So there's the last imbalance, and it started to reject once more. So I thought, okay, I'm going to try and milk this trade, because the only relevant liquidity, there's other than this, which was already taken there. Obviously this spike took these stop losses, so I can remove that. And the only relevant liquidity was here, which was the smart money trap. So we know that this low made that new high. So all of this becomes the new liquidity, right? Because if we make a higher high, everyone who's trading breakout, break and reversal, support and resistance, when there's a major structure break, they put the stop losses below the most recent structure point and then kind of trail their stop loss. So that's why I moved the initial stop loss from this low to this low, because this low again made a new structural high and pushed higher, right? So I was targeting this area. So here, as soon as it started to reject, I put my first stop loss at break even. I was already in, significant profit, and I thought, okay, I'm just going to put the risk back on the table. I'm only risking 1%, and then just continue to roll over. And you can see how clean the momentum was. It literally came exactly to the next liquidity zone. So obviously these traders got liquidated as well, and then that was my little this is my little tick sheet that I go off. So we have a pre-market meditation, check news, locate all the relevant liquidity. Then this is the confluences that I tend to look for, right? So now you can see with the labels that, if you just put the stop loss back on just so it's a bit clearer, you can see, so this was the last mitigation of SMT, which is the relevant liquidity, right? So pushed high, left the demand zone, pushed high, left liquidity, rejected, left liquidity, pushed up, faked the breakout up. So this was the inducement, real breaker structure, clean mitigation, broke structure again lower, come back up, clean the imbalance, covered the imbalance, and then just melt it to TP. So that's basically what happened there. So previous daily high got taken in Asia, so no relevant sellers left. Then 3, always remember the new spike is not real price. Take it out of the equation and resume the analysis. And then the last one was Asia and London building up, trapping buyers. We've already extended, sweeping 2 previous weekly highs on the way up. And then this was the exhaustion phase, which is obviously now hit TP. So the first entry was a 1 to 13 and the second one was a 1 to 6. I actually took profit just a little bit higher. It was like 176.05. So that was a 1 to 8.6, and then left the second entry running to these lows, and then I left a micro runner, still actually running now, and price is basically still developing liquidity to the upside. So again, look, it's basically kind of doing the same thing now that it was in Asia. So this could potentially be an inducement higher, maybe take this structure, because obviously that's the only relevant liquidity left, and maybe a continuation, a rollover for a deeper reversal, because if we just quickly go to DXY, so on DXY I basically saw that a significant structure low got taken, and then price for days was just accumulating and what you call building liquidity. So you could see at strength, right? It didn't just pull up for 1 hour and then roll over. You can see we're in a 4-hour time frame. So 4-hour time frame continue and then continue for 3-4 days. So I thought, okay, each time we take a significant structure, usually there's a significant pullback. I'm not saying a new high, but at least higher, right? Obviously, I kind of used intuition as well. If that's what's going to happen, then right now, because of where GU was, and then where DXY was, I kind of connecting the dots, and obviously they have an inverse correlation, right? So yeah, so that's basically the analysis of how I was thinking, my entry, where I targeted, the reasons why, and obviously the annotations as well. So I hope this kind of gives you a bit of a deeper perspective to what alternative ways there is to actually trade other than the typical retail strategies like trend lines, breakouts, reversals. Obviously this took me a very, very long time to actually understand and comprehend this information, because it is mind-blowing, you know, especially when you've been trading. I traded everything before. I think I mentioned in the last video, I've traded trend lines, breakouts, reversals, Fibonacci, I've traded smart money concepts, and then when I got into liquidity trading, inducements, then I started to really understand with intention that there's nothing random on the charts, absolutely nothing. Everything is painted. It's a narrative that's created to trap people, to manipulate their emotions, and then basically take the money from them. So I hope this analysis was of any value to you. If you like this type of video, let me know, and we'll make another one. So until next time, see you in the next video.